What's up everybody, I am Jaspreet Singh and the tension between Russia and Ukraine is trickling down into our stock market. I'm recording this video on February 14th and things have progressively been getting worse. Like we went from just having tough talks with Russia to then hearing threats of Russia might be moving into Ukraine to then hearing that this is not going to happen for at least another month to the US then deploying troops to be precautious to then this becoming an imminent threat to then President Biden saying that if Russia moves forward, the US will impose swift and severe costs. Now, while this might just seem like some random geopolitical issues happening on the other side of the world, the reality is all these issues are now causing a bunch of volatility and ups and downs in the stock market and the oil market. That means even if you say, who cares, you're going to be the one paying the price. Now, before I go any further in this video, I want to say one thing. The biggest cost of these types of geopolitical issues and these types of wars are not investors losing money. It's not market volatility. It's innocent people losing their lives, which is why, anytime I see this, I'm grateful for being able to wake up in a country like the United States where I don't have to worry about a bomb dropping over my head as I'm driving to work. So just remember that as you're going about your day, how thankful we are to be here, to be able to access this type of education. So if you see a veteran, thank them. That being said, what I want to do today is talk about what's going on between Russia and Ukraine. Not from a geopolitical stance, but from a financial stance, because I want to talk about how this is going to affect your money and the stock market and whether this could create a crash in our US stock market. Like on Friday, February 11th, as soon as the White House put out the statement that Russia might be invading Ukraine very soon, we immediately saw the stock market go south because investors got worried. The one thing that investors don't like more than anything else is uncertainty. Uncertainty causes volatility, and volatility means you can see your stock portfolio go down. And more specific to what's going on between Russia and Ukraine, the thing that investors are really worried about is energy. Russia is a huge exporter of oil and the United States is a huge importer of Russia's oil. Back in 2021, Russia was the second largest supplier of oil to the United States. Plus, Russia is also one of the largest suppliers of natural gas to Europe and America. So if Russia were to attack Ukraine, that will create more tensions between Russia and the United States. I mean, President Biden has already come out and said that he would take swift and severe action against Russia if they did that. So if Russia were to take action against Ukraine, that means that the US and Russia would not be getting along anymore, and that means that the US would not be able to get their same supply of oil because Russia might hold that back. So you have Russia threatening to fight Ukraine with guns, and then you have the US threatening to fight Russia with money because President Biden has created something called the mother of all sanctions if Russia goes forward and attacks Ukraine. So to really dissect the cost of this and what this can do to your money, there's three things that I want to go over. I want to go over the things that Russia could do to us, the things that we could do to Russia, and then I want to talk about everything in between, and then we'll be able to put this all together and understand what this means for the stock market, your money, and inflation. By the way, if you like staying on top of the financial news like this, you should subscribe to Market Briefs, which is a free financial newsletter that I created. So if you want to check that out, I'll put that link for you down in the description below. Russia gives us oil, and if they stop giving us oil, that means the United States would have a smaller supply of oil, which means that the price of oil here in the US might go up significantly. Some experts are saying that it could go up to potentially $120 a barrel. Now, for us, it's kind of hard to quantify what $120 for a barrel of oil is because we're not going and buying barrels of oil. We're buying gas for our cars, we're buying flight tickets, we're buying groceries. So to put that in perspective, back in 2008, when we saw the last major oil crisis, we saw the price of oil go up to almost $150 a barrel. And back then, when oil almost went up to $150 per barrel, that's when we were seeing gas prices hit around $8 a gallon around the country. Now you might be thinking, oh, well, good thing I drive a Tesla. I don't got to worry about that. Well, high oil prices affect more than just gas prices. Travel becomes more expensive because airlines have to spend more money on fuel, which means you have to pay a higher price for your plane ticket. Your grocery bill becomes even more expensive than what it is now because now the store has to pay higher money in transportation fees to deliver their groceries from their warehouse to the store and from the farm to the warehouse. So everything, the whole distribution chain becomes significantly more expensive because the transportation costs keep going up, and your delivery fees, aka your Amazon Prime everything becomes more expensive because now they have to pay more money in shipping to deliver your products to your door. That's why it's really important to understand oil prices when you're trying to understand the economy, because oil prices have a real strong trickle-down effect that when oil prices go up, everything becomes more expensive. And this is concerning now because we're seeing some of the highest inflation that we've seen in over 40 years. And now we could see the price of things go up even more significantly and more rapidly if oil prices continue to rise, because now all of a sudden it's going to become significantly more expensive to transport things from one place to another. And if that wasn't bad enough, it gets a little bit worse. The United States is more dependent on foreign oil now, like Russia, than ever, because when President Biden came into office, he was really pushing green energy initiatives, which that's great for the long-term health of people, but that makes us more reliant on foreign oil from places like Russia. And so now when we're in a time where our economy is still so heavily reliant on oil, but not just any oil, it's reliant on oil from foreign countries like Russia, and Russia has the ability to stop the flow of oil into the United States, that's where it can become a problem for our economy. You can see how this is kind of becoming a game of chess. The United States wants to become less dependent on fossil fuels and oil here in the United States, so we've been reducing the amount of oil that we produce out of the United States. But at the same time, our economy is still so dependent on oil, which makes us more dependent on foreign oil. That gives a lot of leverage to foreign oil providers like Russia, because now if Russia wanted to turn off the flow of oil to the United States economy would be the one feeling the effect, because now they have that stronghold over there. Think of it this way: you need oxygen in order to survive, but you're having some breathing issues, so you need a ventilator. But you don't always want to be on a ventilator, so that's why you stop renewing your lease for your ventilator. But then the ventilator company says, okay, well now if you want to renew your lease with us, we're going to charge you 10 times more than what you are paying now. You still need your ventilator today, you just don't want to use it in the future, but you have no other options because you didn't want to renew your lease earlier. So if we talk about the cost to the United States economy, if the flow of oil from Russia stops to the United States, we stop getting our energy from these foreign suppliers, that means that we're going to see the cost of oil go up significantly, and that means that inflation would get a lot worse than it is right now, because then the price of everything else would get more expensive, not just because of the dilution of our dollars, not just because of supply chain issues, but then because of the limited supply of oil that we have. Now, I don't want to get too distracted in this video, which is why I don't want to go over the things that you can do to beat inflation. I've talked about that on other videos on our channel. We also made an article on the things that you can do to beat inflation right now, the things that you can do with your money. So if you want to read that article on our website for free, I'll also link that for you in the description below. The second thing that you have to understand is what we can do to Russia financially. Besides deploying troops and actually fighting Russia, the next thing that we can do is that we can fight Russia with money, because one of the biggest things that we supply to Russia is technology. So if Russia stops providing oil to us, we would stop providing technology to them, and this is a weapon called the Foreign Direct Product Rule. The last time we used this weapon, and yes, it is called a weapon, was against China in 2020, where we stopped supplying different technologies and softwares and hardwares to Chinese companies. So if you are a US company and you create some sort of technology and software that's used by one of these overseas companies, well, then the United States government essentially would ban you from selling these products to China in that case. In this case, it would be Russia, but that's what they did back in 2020. This hurts the country because then the people don't have the ability to buy the same technology products that they could before. Now, you can't buy your smartphones, you can't buy your laptops because your companies don't have the materials to produce that. And then the companies within your country are then starting to struggle as well. Last time we saw this happen in China, we saw some of their companies drop by 30% in value just because they no longer had the ability to produce their products. So it kind of creates a financial stranglehold on some of the strongest companies in a country that you're trying to fight. It does affect the United States to an extent as well, because now if you're Apple or if you're Microsoft here in the United States, you can't export as much stuff because then you're not going to be giving it to Russia. But on the grand scheme of things, it hurts the countries that you're limiting more than the companies that you stop from selling. So if Russia can fight us on the oil side and we can fight them on the technology side, what does this mean then for your money and the stock market? The answer again is, well, it depends where you look, because unfortunately we have some companies that will benefit if there is a war. Companies like Lockheed Martin already started to go up as soon as these threats and talks of Russia invading Ukraine happened, because Lockheed Martin is a big supplier of military products. And so if there is a war, then some companies will benefit. But then you have the much larger elephant in the room that everybody's starting to become aware of, which is inflation, because as inflation is now ramping up to the highest levels that we've seen in decades, anything that can cause more inflation is going to be very concerning to people, because now it's going to become more expensive for you to fill your gas. It's going to become more expensive for you to get your groceries. It's going to become more expensive for you to live your life, already in a time where everything is getting so expensive as it is. And so if things keep getting more expensive, well, then that could slow down spending. We've already been starting to see that happen. And so if people can no longer spend money because they just don't have the money to spend, that means companies in America would be making less money because people just can't afford to buy as much stuff. And if companies in America are making less money, that means their stocks are going to get hurt, which ultimately hurts the stock market through an indirect chain of events. And that's where you're going to really have to monitor what the Fed is doing, like I've talked about before, because the Fed can either fight inflation or they can fight a slowing economy. They can't do both at the same time, because if you fight inflation, you're going to shrink the monetary supply. That means you're going to raise interest rates and you're going to make borrowing money more expensive, which means that will slow down the economy. So fighting inflation slows the economy, but if the Fed wanted to fight a slowing economy, which is what we're already starting to see, then they would want to stimulate spending. And the way that you stimulate spending is by creating more inflation. It's by lowering interest rates, it's by pouring money into the markets. And when you do that, it stimulates spending, which helps to grow the economy, but that creates more inflation. So this puts the Fed and the economy in a big conundrum, because then what do? Do they want to fight a slowing economy, or do they want to fight inflation? And how do you not fight inflation when inflation is getting so bad? But again, the Fed is worried about the economy, because then that could mean that people start losing their jobs. So this is the balance that you really have to see here in the United States. And if inflation starts getting worse, you're definitely going to want to start paying attention to what the Fed is doing. And I'll do my best to keep you updated on our channel. If you like what you saw so far, here's the video I made on the housing market that I think that you'll really enjoy. And while you're at it, if you want to start generating passive income, we put together a free guide on how to start generating passive income, and you can download it by clicking that button right over there. Thank you for watching, and as always, keep hustling. If you want to lock in a low mortgage rate or a refinance rate, it's better to do that sooner rather than later.